What's going on, everyone? This is Mike, the Tactical Stock Scalper. We're going to talk about 8 tips to make you a better investor on your high yield dividend investing. All right, so without further ado, I find these 8 tips to help me, and actually I have a whiteboard, and I have 4 of my main tips that I have to focus on, whether I'm trading or investing. I have them on a whiteboard in my office, and that's what I look at when I'm making a move. I go through my rules, but I want to share some of those rules with you. Okay, first up, on a high yield dividends, when they when they come out, don't just jump right in. Don't rush in. Take your time. See how they develop. Now, if you rushed in on Coney, right, when it first came out and then it went up to 30, you'd have been doing great. And you'd be like, Mike, you're an idiot. I should have went in. But by and large, with these high yield dividend funds, we know they're going to go down. Don't rush in. Let them develop. Okay? That's one tip that I use all the time. And I don't rush into anything, or at least I try not to. Okay, next. Belief in the underlying. All these rules are important to different people at different times of their investing journey, but belief in the underlying has to be up there. If you don't know a lot about the underlying, or you don't really care for it, guys, don't get in it. There's no reason to get in it. There's so many other options out there that if you just want to get in one and you're not really sure of the underlying, if you like it or not, meaning the company, probably should not do it. Belief in the underlying is so important, and that's, one of my biggest rules. I'm not going to get into it, the high yield dividend fund, if I do not believe in the underlying. If you like talking stocks, if you like chatting about charts, I got a Discord server. I'll leave a link in the description. Love to hang out with you guys. All right. Number 3, I have notes down here, so excuse me if I refer to my notes from time to time. Number 3, which one do you want to get into? Okay, there's different kinds. For instance, there's very volatile ones, and there's stable ones. Yeah, there are actually stable high dividend funds available. For instance, AMZY is a great stable fund. Just go look at the chart, right? It has been very stable. Dividends aren't through the roof, of course, or the percentages, but the share price is stable. You really don't have to worry about when all the people start talking about NAV erosion, right? But you don't have to deal with that nonsense when you deal with something like AMZ. Or do you want something more volatile, like a Tesla or Nvidia or something like that has a lot of upward and downward momentum where you can catch big upside over a large portion of time? You also can catch a lot of downside for a long period of time. So it depends what you want. Do you want to put more allocation towards something where there's a bigger upside, or would you rather have an allocation that's just cool, that's just flat, baby, that's just laid back? That's AMZ. So it just depends on your investing preferences. All right, next, you got to have a stomach for these. There is no doubt. Not many are like AMZ, right, where they just chill along in a little range and you make your little dividends and life is great. You got to have a stomach for some of these. Look at a chart of Tesla, for example. You got to have a stomach for it. You have to have belief, going back to one of the top rules. You got to have belief in the underlying that it's going to go up over time. So with that said, you got to have a stomach for these. If you don't get into them. They can drop just like the underlying and catch all the downside that the underlying is catching. Got to have a stomach for it, guys. Period. All right, next. probably this is my biggest rule for me, okay? Besides belief in the underlying. So this is rule number 2 for me. And maybe it is for a lot of you guys. Patience. It takes patience to be successful. It doesn't matter if you're scalping. It doesn't matter if you're day trading. It doesn't matter if you're investing. It takes patience to wait for the proper setup if you're trading, to wait for the proper buy-in time to get into a high yield fund, right? It takes time and it takes patience. This isn't a get rich quick scheme. This is real, this is tangible, but there are rules that have to be followed to make it as successful as possible for you. Sorry about the little spittle right there. Patience. Monster rule. You got to have it. And you just, if the price isn't there on something you want, you got to let it go. You control your buying, not the market. Don't let FOMO and other things attack you mentally. Have some patience, guys. Let it drop and buy in at a lower price. And I think your account will thank you for doing that. Okay, next. Don't lump buy all at one time. I see a lot of guys do this. They get really excited and they see a product that they like, whatever it may be. You know, Coney's the latest example, right? They really like it. So they go in real heavy and trying to capture that yield right away. And then what inevitably happens, like it does with a lot of the high yield funds, the price starts going down. And now they have so much in there, they really can't get their average down in a timely fashion because they went in with too much all at once. And that is really going to affect your emotions negatively because you're going to be over leveraged from the get-go. And then as it drops, your emotions only get worse as time goes on, especially if you lack patience. Okay. DCA at different levels. Okay. This is really, really important. It's really helped me. And for instance, with QQY, my average is low. Okay. I've already made 11% of my initial investment. 11% has already been given back to me. That's crazy. And I've only been in that thing like 3 months, maybe 4 tops, but 3 to 4 months. 11% has already been paid back to me. And I've lost very little on share price. Why? Because I DCA at levels on the chart, okay? I don't just buy because it's red. I wait for it to hit a certain resistance level. And then maybe it'll bounce and go up from there. Maybe it won't. But at least it gives me a level to buy into that's lower than the level I thought, than just buying because it was red. Finding levels on a chart to buy in and having patience, you will be rewarded, no doubt. Okay. Lastly, chasing yield is very dangerous. I've seen it with YouTubers. I've seen it with other guys that, let's take Coney, for instance, right? This is a great example because it should be fresh in everyone's mind. Came out at $20. It dipped down to 18, consolidated there. This is Coney, not coin, right? And then ripped up from there. And then once it started getting to 20, 22, 24, 26, 28, 30, people were piling into it as it was racing up because they knew the yield was going to be high. And inevitably, what happens oftentimes in these situations where stocks start skyrocketing up, they hit a level and then they come back down and maybe they'll go up again. But at least wait for a dip. At least wait for a level. And then let's say you get into it and it starts dropping and then the yield starts dropping, right? Because the volatility isn't as high and the price goes down. So people sell out of it. They see what other yields are on other stocks and they go into those high yield funds. Guys, these yields change monthly. Chasing yields on something where the yield isn't set in stone is, I think, kind of reckless, okay? Because you don't know what the yield is going to be month the month to month. So chasing yield, you'll just be selling out, losing money, going into the next one because the month before the yield was high. Find out when you get into it, oh no, it dropped or something else happened and yield is lower, and you're just being this big circle of chasing yield and losing money. I hope you enjoyed the content. If you did, please give me a thumbs up. Just caress the like button. That's all I ask. And thanks for watching. This is Mike, Tactical Stock Scalper.